Welcome to our latest Apex 30-minute Thursday. Today we're going to be presenting prerequisites and setup for receivables. My name is Ann Wehrheim. I'm the practice director here at Apex. And presenting today will be Beverly Miller-Wisher and Paul Abbey. Just a little bit about us here at Apex without going into all 18 areas of our solution offerings. Our Info practice offers global solutions per industry through digital innovations like Infor Epic and Agile, workforce mobilization through staffing to support any size implementation, and our modern enterprise solutions cover migrations to standing up a PMO and running it for you. Most of all, our Info practice works with clients beyond the cloud, offering the right services at the right time. Before the project, our advisory services guide the client through the selection process and assess organizational readiness through BPA and process design. We offer total program governance and change management services to start clients off on the right foot for their implementation. During the project, we offer prescriptive guidance to reduce risk, duration, and cost. And after the project, managed services help clients to sustain their investment through on-demand service, staff augmentation, and incident support to be your partner before, during, and after the project. I'd like to go ahead and have Beverly and Paul introduce themselves, and I'll turn it over to them. Thank you.
Thank you. Good afternoon. I am Beverly Miller-Wishart, and I'm a consultant and have been with Apex approximately 2 years.
Hi, my name is Paul Abbey. I'm a senior consultant with Apex, and I have 18 years experience in the Infor space.
Today, Paul and I will be showing you the different components required for using accounts receivable and walk through some of the setups that's critical to understand. First, let's look at an overview. It's important to understand that receivables ties in with many different modules. We don't have time to talk about the setup you need for those modules, but if you're anticipating using any of those modules, it's highly likely that you'll also need to use receivables. In other words, if you plan on using any of these modules, it's important to do an analysis to see if you need to use receivables because it's so connected. The receivable modules interfaces seamlessly with other modules to ensure efficient financial and operational processes. For example, if a customer requires a refund, the receivables module can create a refund transaction to be processed in accounts payables. Receivables enables all organizations to manage customers and customer balances from credit determination and setup through to invoice interfaces. It enables accurate payment processing, cash application, all the way to managing customer aging and the collection activities, providing speed, control, and accuracy throughout the process. Receivables has 3 main processes. One is manually creating transaction by way of entering invoices, debit memos, and credit memos that have not been interfaced from other FSM application. Cash processing is another way of entering cash payments and then applying the payments to the open transaction. Bear in mind, this can be done either manual, automatic, or interfacing. The third process is credit management, and this can be accomplished by reviewing customer balances and running agent reports. As far as receivables is concerned, let's talk about some of the prerequisites for receivables on this list. This is just an overview, and once these prerequisites are coordinated, we can get into the setup task for receivables. As you can see on this list are global ledger, currency, cash, and terms. Let's get more into detail. Before processing receivables, certain parts of the global ledger must be set up. The purpose of a global ledger is to relate a subsystem company to an accounting entity. The global ledger company does not have any part in calendar or chart definition. Multiple global ledger companies can relate to an accounting entity. It acts as a bridge from subledger to the global ledger. Currency must be completed before receivables. If your organization conducts business in only one currency, your consideration for currency setup are clear cut. For single currency businesses, define a currency code that represents the currency in which the company do business. For multi-currency businesses, additional setups like currency relationship, rate tables, gain or loss accounts are required. The cash code represents a bank account. An organization may have more than one bank account, such as operating, disbursement, payroll, or investment bank account. Multiple accounts can be defined and used by payables, receivables, and cash management. Receivable terms application enables a company to define any special payment terms that you have negotiated with a customer. The defined terms are used to calculate invoice due dates and discount information. An organization can assign a term code to customer invoices, debit memos, credit memos, vendors, and purchase order. This setup ensures smooth processing of receivables within the system. Best practice is to have a separate bank account and ensure the terms include all of the contract negotiated with the vendor. Here, as you can see, this is a snapshot of receivables setup task. Before setting up customer group, an organization need to plan their customer structure and processing rule. And first, a customer group is really a collection of customers that can be shared by multiple receivable companies. This setup includes customer numbering option, agent rules, and currency. Agent rules provide default values during company setup, but can be overridden at the company level. Customer balances can be consolidated in one agent report across all companies. Multiple customer groups may be preferable for different types of businesses and non-overlapping companies. Some of the requirements are select a customer group before specifying a receivables company. Sharing customers across companies can reduce setup time. Each customer must be assigned to a customer group. A company cannot be assigned to more than one customer group. In our experience, or my experience, most companies have only one customer group. Defining customer classes. Customer classes have common characteristics. A customer class is made up of a major class and one or more minor classes. At least one customer class for each customer group must be defined. Leveraging customer classes in FSM enhances operational efficiency and customer relationship management. Major classes act as a foundational grouping mechanism for areas like chart of accounts, customers, and vendors. They provide a high-level structure that helps define and organize data, ensuring consistency, simplifying workflows, and enhancing the system. Characteristics of major classes are designed for broad classification, serving as the top level in a hierarchy. There are ways provided for logically group related elements such as accounts or entities. Major classes ensure consistency in categorization and reporting. Some of the major class would be like grants, and minor class would be federal grants. Another example is major class would be rent, and minor class would be rental lease. Best practice is keeping it simple and not getting complicated with the structure. Receivable company. A receivable company contains rules and defaults necessary for processing and reporting. Company set up to reflect the organizational structure. Prior to setting up a company in AR, a company in the global ledger application must be defined along with customer group. Each receivables company must correspond to a global ledger company. One can have multiple global ledger companies and one receivable company, but cannot have more receivables companies than global ledger companies. If there's only one global ledger company, use process levers for further organization. Transactions such as payments and invoices are unique for each receivables company. Most of the processing occurs at the company level. Payment application can transcend invoice company. Some of the key points are define a customer group before defining a receivables company. All companies within a customer group must use the same currency table. A company cannot be assigned to more than one customer group. Additionally, the receivables company are where the account codes are defined, but they must exist in the global ledger first. Thank you. I will now turn it over to Paul.
Thank you, Beverly, for this overview for the first part. Next, within the trajectory is the process level. So a process level represents a breakdown within a company. Some examples that will help identify what a process level is consider this. It's like a division, a department, maybe a sales office, or a cost center. And you must assign a process level to a transaction. A process level contains default balance sheet global ledger accounts, which we have gone over a little bit with Beverly in the previous slide. You can also default cash and account receivable accounts. You can sort transactions by process level on money forms and reports. As we reviewed, and to reiterate some of the previously mentioned points by Beverly, before you begin setting up your process level parameters, you must complete your general ledger codes, your receivable codes, and your receivable company, which we will go through in a little bit. Process levels that relate or pertain to each other can be grouped and reported on based on the categorization that your company flows and based on your policies and procedures as well. So some of the important codes that we will go through that are important for the accounts receivable setup. There are two types. There's a receivable processing code, and then there's customer codes. So again, just to reiterate, this is a crash course on everything that is prerequisite. So before we start, you must be familiar with the global ledger codes and your company's processing rules. And to get into it more detail, we'll go through the processing codes. So there's a cash application adjustment reason code, and this is a reason code that is used to populate general ledger accounts and to set review requirements for cash application adjustments. In summary, you assign these codes to adjust cash application. There's a memo reason code, and these are describe a debit or credit memo during a transaction entry. A distribution category, which is used to speed up manual defined transaction. And mind you, the asterisk does show that this is optional, but it does help streamline a lot of the process within your organization. There's also dispute codes, which are used to default, which is the default description on disputed transactions. And FYI, you can report on this as well. You can report and inquire on transactions using a dispute code. There's also an operator code, call it also a user code. And this usually identifies the individual who was responsible for a specific transaction. General ledger account codes, which was previously shown in the previous slide. A lot of us are familiar with this as defining a code block, which is very important for general ledger and transactions and letting the flow move more efficiently within your organization. So there's the customer codes. They're codes that are assigned to a customer, and they are used as default values for processing statements, finance charges, options for the customer. So let's cover some of these types of codes. You have the receivable cycle code, which are used to control the selection and processing of statements, finance charges, and dunning letters. You have the customer class, which Beverly covered in the major and the minor classes. You have the credit analyst code, which records the credit analyst records contains the name and phone number of the person slash the customer who is responsible for managing credit. And it's also important for reporting and inquiries. They have the territory codes, which goes hand in hand with the next one. Territory codes are defined for each sales representative, and it defines a territory. It could be a geographic location or a department within an organization. The sales representative codes are sales representatives that are used to define the name, commission, percentage, and territory of the sales representative. And then you have the lockbox codes for those that have used them with a lot of the cash application. These are part of the banking identifiers. And some of them are very important because it gives you a unique identifier associated with a bank operated mailing address, and it helps with a lot of tracking for customer payments. You have also the on lockboxes is also a optional option. You have aging codes. Aging codes are used as default aging options for your customers. You have the hold codes, which are used in order entry or external system to prevent orders from being processed and or executed. You have invoice type codes, which are also optional. They are used to define the type of billing or receivable invoice. You also have the cash application code, which is a user-defined calculation or algorithm that may be used to create selections for application methods, incorporation of aging balances, and processing rules. And you have regime codes, which are custom-based, also optional, custom-based codes that may be added to billing and receivable invoices. I know I've used this sentence before, but again, before we can move to the receivables functionality or the functional side of receivables, you must set up your customer defaults, your customers, and your company customers as well. So just a quick overview about customers. A customer is a person or entity from whom you charge and collect money. A customer record contains the name, address, limits, identifiers of each customer, also within a customer group. And the customer is also is defined as within a customer group and at the customer group level, so that customers with balances accumulated across companies can be shared. Customer default codes can be used to define customers that have similar parameters. You can override these defaults at the individual company customer level, and you must specify at least one customer default code for each company. Transitioning into the company customer, you would use the company customer setup to define and maintain customers at the company level. And then remember, when creating the company customer, the values from the specified customer are the default code and the company. So you can override any of these values in the company customer setup. Now by specifying company customers, you can establish company-specific processing and cash application rules for a customer, making the receivable module or tools more desirable for tracking transactions and cash application. Now, I know a lot of you might have had their jaw drop. We are not going to go into match setup or purchasing or tax. However, you'll notice that there is some overlapping with setup requirements between receivables, matching, purchasing, and tax. The only odd one out of all this is tax, and tax is a required tool or a module that has to be set up prior to AR setup. And just a quick summary and next steps. We went through prerequisites and AR setup, as this is what we covered right in this session. And then to go through the progression of everything, the next steps would be to create transactions and enter anything that is not interfaced manually. And here you would start a lot of the predefined AR codes that I mentioned in previous slides. Next would be the cash processing part, and this is the heart of the application. And this is where you would also apply cash payments to open transactions, whether manually or through an interface and through the various interfaces. And FYI, this is also where you would include some of the codes that were presented before in previous slides. And finally, we would review these applications in the credit management part. You would review these applications and make sure that there are no abnormalities in customer balances. And then we would run aging reports and check what and where unpaid balances are present. All this would be within the context that we can analyze this data and report on it based on the parameters that is required.